Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Service International Limited. Here is your daily technical analysis of foreign exchange markets. I'll start with the euro against the dollar. A very significant moment yesterday. A combined key reversal down and bearish engulfing pattern. If that wasn't enough, it was worth looking and seeing what the market managed to achieve and what it managed to fail to achieve. Prices pushed up over 4 significant levels. The declining short-medium moving average, currently 107.10. The April 2020 low at 107.25. The rapidly descending February to date downtrend, currently 107.30, and the May 2020 low at 107.66. However, the market could not sustain the move higher and plummeted down through all those resistances turned into supports, turned back into resistances again, as well as a few others. These were the declining middle time, currently 106.53, the well-highlighted January to May bearish Andrews pitchfork, and the 2020 low at 106.35. Prices did not manage to reach down to the better support, which starts from the April 2017 low at 105.68 and extends lower thereafter. I would just like you to remind you of my recent comments of the importance of the downward pressure we've seen for the last 2 weeks by the short-medium moving average. All you need to do was look upwards on this daily chart at the last time the market met the short-medium moving average back at the end of March, and the resultant move lower thereafter. It seems the market may be rhyming, if not outright repeating itself. So far today, small reactionary move back up, capped so far by the 2020 low in the middle time, and looking like an indecisive doji cross right now. Cable, aka sterling against the US dollar. A second bearish black crow yesterday, following on from the previous session's immediate countering bearish dark cloud cover pattern and bearish double. Prices dropped down into the congestion zone between 124.78 to 125.09, which contains the 38.2% Fibonacci of the March 20, June 21 move at 124.89. We ended up closing right on that 38.2% Fibonacci line. So far today, a test of the parameters of the 124.78 to 125.09 congestion zone, reaching up to 125.09 and interestingly down to the 124.78 level as well, but so far showing a reluctance to really move out of it. Next support below is at 124.36, whilst topside we have the smaller congestion zone at 126.72 to 126.86, which has entering the frame the descending short-medium moving average, currently 126.85. Euro sterling. A huge immediate countering, key reversal down and bearish double pattern yesterday, which on its own has managed to set up the conditions for a possible weekly key reversal down for this week. It also has seemingly shredded any chance of a prospective ascending triangle pattern and opened up the opportunity for a possible cat's ears or double stroke triple top pattern formed since mid-May. Overall, we have supports further below from the April 21 low at 84.70, also the broken September 21 to date downtrend currently at 84.57. That makes up the upper trend line of the extended diamond pattern. Then the flatlining long moving average currently 84.39, the rising short medium moving average currently 84.43, and the upper trend line currently 83.90 of the smaller and more robust lopsided diamond pattern. For the moment, though I do not know for how much longer, we still have the following targets on the upside. For the smaller diamond pattern with a primary target X in the 86.80 area and a harder to get secondary target X1 in the 87.65 area. And for the extended diamond pattern with a primary target X2 in the 87.15 area and a harder to get secondary target X3 in the 88 even area. Additionally, there's also one final pattern, and it is the big one, which this market had previously triggered but then sent mixed messages on, including yesterday. I've spoken for months now of the very large falling wedge pattern, currently 84.57 to 81.43. This pattern is still in operation, but it has fallen into shadows a little with the rising prominence of the diamond patterns. And though triggered, it still leaves us with some serious questions, which continue to grow in number. You see, it has the most ambitious upside target of all. Target X5 for this pattern is in the 88.65 area, and that is a really big ask. Now, one final point. For a weekly key reversal this week, we need a close tonight either over 85.80 or under 84.94. If we close in between those levels, then we would have a lesser outside week. At the moment, well, we're just looking at as a lesser outside week. And so far today, a small reactionary pull back up and then pull back down again, and we're still looking an outside week right now, but also looking at an indecisive spinning top or maybe doji cross for today. US dollar against the Indian rupee. A bullish white soldier yesterday, as the market seems to have put aside some of its doubts about approaching the all-time high. Prices moved above and closed over the broken lower trend line, currently at 77.78, of the broken ascending triangle pattern. Below, we still have the interesting flatlining short moving average, currently at 77.62, that's previously acted as support, and the more formidable lower time, currently 77.61, of the January to April bullish Andrews pitchfork. This is the time that provoked a strong bullish reaction late last week. Overall, the market is starting to edge up and out of the 77.40, 77.80 congestion zone that we previously were seen now for the last 4 weeks. Prices are also still in between the previously mentioned lower time below and the middle time above, currently at 79.06 of the mid-January to early April bullish Andrews pitchfork. As a precautionary move, I've drawn a new shallower lower trend line, currently 77.44, as an extension of the ascending triangle. I'm not sure on this, but it seems that it is a reasonable thing to do right now. Meanwhile, we still have overhead target X in the 78.30 area. This is the potential target for the whole of the 22 action, 2022 that is, being a possible, if ragged, bullish halfway hesitation. So far today, a slightly lower open, right on the broken trend line of the ascending triangle, with a little dip, but the main action is a slow approach to the all-time high once again. Don't hold your breath on this one. US dollar against the Brazilian real. A higher, if indecisive, spinning top, though at a pinch you could call it a fourth bullish white soldier yesterday. If you choose to call it a fourth bullish white soldier, then personally, I think you would find yesterday's action a disappointing follow-on, with the market only just managing to close for a second consecutive time over the 2021 low of 489.08. Further up, we have the 50% Fibonacci line of the October 19 to May 20 move at 496.58, which is a gateway to a whole load of further resistances. Meanwhile, below, we now have some significant resistances that have turned into supports, notably the 50% Fibonacci line of the June 19, May 20 move at 484.26, and a short medium moving average, currently 484.38. In the bigger picture, we are still in between the upper time, currently 497.97, and the middle time, currently 451.88, of the January to May bearish Andrews pitchfork. This is still an early development bearish picture, but it has started to show some merit in forming and hence showing the recent bearish angle of attack. Now, a contrary point. I have again been tempted to draw an April to late June bullish Andrews pitchfork. For the moment, I will resist that temptation, at least until prices formally break over the upper time of the existing bearish Andrews pitchfork. US dollar against the Mexican peso. An interesting and somewhat out of the blue key reversal up yesterday. My first thoughts were, this has clarified the previous session's pattern, which initially I thought might be a third indecisive action in a row, just with a long tongue on top. I also pointed out yesterday it could be seen as a possible shooting star pattern, though I had to admit at the time as to whether it was a type 1 bearish or type 2 bullish, well, I hadn't a clue. However, yesterday's action clarified this as a shooting star pattern type 2 bullish. We nevertheless still have the same parameters added in recent days. Overhead, the next resistance is still at 1971.68, the April 22 low, whilst ahead of the middle time support, currently 1936 even, of the November 21 to March 22 bearish Andrews pitchfork, we have the 2021 low at 1953.63, which has been a reasonable closing basis support, and then last week's low obviously at 1940.70. So far today, well, a higher open with a dip, but then a resurgence such that prices are now tackling the April 22 low. Beyond this, there is some reasonable minor resistance in the 1981.80 to 1986.25 area before we start looking at the declining short medium moving average, currently 1996.55. Thank you for listening. This short version broadcast gives essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyrights Eddie Tofpik and ADM Investors International Limited. And here comes the final bit.